Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of corporate mumbo jumbo. Today we're diving into Isabella Bank Corporation's latest annual report, a document so exciting it makes balancing your checkbook look like an extreme sport. Just kidding, but hopefully we'll find some interesting insights. This report gives us a peek into how Isabella Bank, a community bank with branches scattered across central Michigan, fared in 2024. We'll look at their financial health, the risks they're facing, and what their plans are for the future. Think of it as a checkup for a financial institution. First up, let's talk numbers. For 2024, Isabella Bank reported a net income of about $13.9 million. That sounds like a lot, but it's actually a drop from the $18.2 million they made in 2023. So right off the bat, we know they earned less this year. Why the dip? Well, the report says it's mainly because their net interest income took a hit. Net interest income is essentially the profit they make from lending money, taking the interest they earn on loans and subtracting the interest they pay out on deposits. In 2024, that number was about $55.8 million, down from $57.9 million from assets didn't keep pace with the rising costs of paying interest on things like deposits. It's like trying to fill a leaky bucket. The higher cost of funding meant that the bucket was draining quicker than they could add money. Another factor that lowered their profits was the increase in provision for credit losses, which went up to $1.8 million. Think of this as the bank setting aside more money to cover potential bad loans. It's like an insurance policy for their loan portfolio. On the bright side, not all the news was bad. They saw an increase in non-interest income, particularly from wealth management fees, meaning people are using their investment and trust services more. This is good because it shows they are relying on more than just loans to generate profit, which is what all banks do. Moving on to the value of their stock, the report shows their shares are traded over the counter, not in a major exchange like the New York Stock Exchange or NASDAQ, so it's more difficult to buy and sell shares as the volume traded is small. They've been buying back their own shares as the volume traded is small. They've been buying back their own shares. This can boost the stock price and is often seen as a way to return value to shareholders. Todd, the good news is they are still paying a quarterly dividend of 28 cents per share. Now let's talk about the things that keep bank executives up at night, risk factors. This part of the report is super important because it outlines all the potential problems the bank sees on the horizon, and there are many of them. The report talks about credit risks, meaning borrowers might not be able to pay back their loans. There's interest rate risk. A big factor for banks, how rising or falling rates can mess with their profits. The amount of debt the bank have also brings its own risks. Banks are also heavily regulated, and any changes in those rules can significantly affect how they do business. It's like playing a game where the rules keep changing. One of the risks in the business is cybersecurity risk. They acknowledge that they are a target for cyber attacks and are spending on it, but it's still a big risk for them, which would cause disruption, huge reputational risk, and big expense. And finally, the report talks about managing their risk. To stay safe, they do a lot of analysis, mostly around how changes in interest rates affect their assets and liabilities. They are trying to stress test the bank and see how it would perform under different scenarios. Okay, so what do I make of all this? The bank had a rougher year, but they are still profitable and not in troubled water. They are facing a lot of headwinds, including the tricky environment of interest rate hikes and increasing economic uncertainty. In 2024, we see that the bank have Tier 1 capital of about 12%, meaning the bank is likely in a position to follow through on their investments. We will have to see how 2025 will turn out for this bank. Thanks for watching. Remember to hit that like button and subscribe for more deep dives into the world of corporate filings. What other companies do you want me to cover? Leave a comment below and I'll see you in the next video.